Hi, welcome to the Sygnus Preference Share Prospectus review here on L.E.A.R.N Grow Invest. What we do in these reviews is go through the prospectus at a very high level, the main sections that are typically common with each offer. And the aim behind doing this is to help you to understand the offer, whether or not it's the right investment opportunity for you. And so it's something that we do here on L.E.A.R.N Grow Invest. So if it's your first time here, welcome. We are going to, let me just actually start by putting up the disclaimer before I go any further. Anything that we discuss here is for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. My hope here is to just go through the prospectus, help you to understand it better. Some persons might not have heard about a preference share before, so we're going to get into all the details of the offer so that you can compare it with whether or not it's the right opportunity for you. And then, of course, I'm going to recommend that you speak to a licensed financial advisor before you make any further decision. So I'm just going to roll our intro and then we'll get started.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right. So these are the sections that we're going to go through. I'm going to start with the company history, explain who Sygnus is. Again, for those who may be joining us for the first time, we usually start by explaining a little bit about the company so that you understand who you're potentially spending your money with. The offer details is what we'll go through. That's the core reason why you're here. So we'll break that down. And then we'll go into the financials of the company. So usually for our prospectus review, we do this at a high level. It's not a financials review, but at the very least, we're going to look to see how the company has been performing over the last few years, and then see if there's anything that stands out to us, maybe questions we may have or anything of that nature. And then, of course, we go into a dividend policy. Now, because this is a preference share, this is pretty much a dividend opportunity if you were to look at it from that perspective. So, of course, this particular offer comes with dividends. That's the whole idea behind it. So I'll go through that policy, and then, of course, we'll talk about how to apply. So currently, there is a lead broker, JMMB, and so they have instructions within the offer as to how you can apply. I'll break that down for you, and then from there you can see what steps to take. Of course, if you have any questions, be sure to just let me know. All right, so a little bit about Sygnus. So Sygnus here is a leading alternative investment management company in the Caribbean and Latin America. So the sectors that they span there, or the services rather, would be private credit, real estate, and private equity. So Sygnus manages effectively 3 companies, and we're going to go through them here. So you have Sygnus Credit Investments Limited. That's a company that has the preference share offer out right now. That is SCI. They're listed on the Jamaica Stock Exchange. So you'll see the ticker as SCI JMD as an example. And they are, as it says here, a pioneering private credit investment company which offers creative debt financing to middle market businesses across the Caribbean. Then you have Sygnus Real Estate Finance Limited, that's SRF, which again would have covered their IPO prospectus last year, I believe it was. So you can check that out on our channel if you want to learn more about them. They provide what we call flexible capital, that's debt or equity, to all classes of real estate assets. So the focus of Sygnus Real Estate Finance is the real estate asset class. And then you have Sygnus Deneb Investments, which is SDI, that invests in private equity capital in companies in the form of growth capital, buyouts, and turnarounds, right? So they're just pretty much explaining here the 3 areas that Sygnus Capital manage in terms of companies. That of course forms a part of the Sygnus group, and also would have last year acquired L.E.A.R.N Financial that's based in Puerto Rico, and that company focuses on asset-backed loans and leases to SMEs in Puerto Rico. And then of course, I mean, you get a lot of information about that company if you go to their websites. I'll share those screenshots for you to see. So this is a snapshot of the Sygnus main website. A lot of information there if you want to dig deep and learn more about the company. Some great information there. All the pages have quite a bit of information to go through. So I definitely encourage you to do that, so you learn more about the different areas of the company, learn about the founders, learn about the board, and under their investor relations section, you'll have all of their earnings calls, their quarterly reports, annual reports, and so on, right? So they actually do earnings calls. They had one earlier today over on their YouTube channel. So if you want to, again, know where the company is financially, you can check that out. Then I mentioned L.E.A.R.N already. So they have a website as well. I'll share the link in the description that you can go and read up about the company. But they operate primarily in Puerto Rico. And then what I got from just the interviews I've watched with Sygnus, for them, L.E.A.R.N is an opportunity for them to enter into the Spanish-speaking market. So Puerto Rico, as you know, would have been it's an opportunity for them to expand their client base. So if you watch, I believe it's their AGM that came out earlier this year, they showed the breakdown of both companies, you know, the opportunities that they saw in combining both. A whole lot of information again, so you can just understand the finer details of this. But now L.E.A.R.N is a part of the Sygnus group, and they're able to benefit, of course, from the revenues and profits generated by this company into benefit for all shareholders, right? I have this screenshot as well from the annual report to help you just kind of see the structure for SCI. That's a company, again, that has the preference share. So you have Sygnus Credit Investments Limited that's listed on the stock exchange, and you see here there are US shares and there's $J shares. So you'll see SCI JMD and you'll see SCI USD on the Jamaica Stock Exchange website. So just if you see that ticker, it's pretty much the same company, but they have shares in both currency. All right, and of course, this preference share is a similar setup where they have a USD tranche, well, two of them, and they have a JMD tranche as well. All right, so let's look at the offer now. We're going to get into those details. So as I mentioned, there are three tranches here. So you have, well, let me start with Class C. They're issuing 8 million shares. Price per share is 100 Jamaican dollars. The dividend yield per annum is 10.5%. So regardless of the number of shares you own, you get 10.5% in terms of a dividend yield on those shares each year, and the term for it is 2 years. And of course, the dollar value of those shares is 800 million Jamaican dollars. Then we have D&E classes. It's $10 US per share, and that dividend yield is 8.5% and 8%. One is 3 year, one is 2 year, and the total dollar value is 10 million US each. So they're seeking to raise a total of 20 million US there. So I'll explain this a little bit more later in terms of how you can calculate the yield, etc. But this essentially is the offer, right? But we're just gonna, continue learning a little bit more about it, and then we'll talk about it some more at the end, right? So as I mentioned on the previous slide, 20 million US is what they're for the US shares, US preference shares that are being issued, and 800 million Jamaican dollars for the JD denominated preference shares. So that's the total amount that they're seeking to raise, and we'll get into the use of proceeds based on what they've outlined in the next few slides, right? So high-level information about the offer. A prospectus would have come out just a couple of days ago. The opening date is officially the 20th of November. Closing date is December 6th. So that'd be just, I think that's just about 3 weeks thereabout. And the classes, as I mentioned before, the minimum subscription is 100 units for Class C. That's the $J shares, and D&E is 50. So if you simply multiply that by the price per share, you get the minimum amount that you'd have to spend to participate in this offer. Subscription price, 100 Jamaican dollars or $10 for the USD shares. Basis of allotment. So just like with an IPO, you'd have a basis of allotment, depending on whether or not it's fully subscribed or oversubscribed. So this would be announced 6 days after the closing date. Similar to an IPO, you would have a case where if they're able to raise the entire amount before December 6th, they do have the potential to close the offer early. But then, of course, based on the amount, it's very likely that it's not going to open and close day one like an IPO would. But then, of course, if you are interested, you do have the opportunity to apply right away. And as I said, we're going to talk about that later. If any refunds need to be processed, then they're processed within 10 days of the day that it closes. And then the listing of shares would be, 15 days after the basis of allotment has been shared. So in terms of how the company intends to use the capital that they raise, now they have to pay raising and listing expenses, and this is projected to be $1 million. So they'll have to pay the fees out of how much they raise. And then the second part, in terms of how they're planning to use the money, it says here that they plan to invest and hold the net funds raised from this invitation in customized credit instruments, primarily by medium-sized firms across a broad range of sectors, including but not limited to manufacturing, distribution, financial services, energy, industrial, construction, transportation, infrastructure, and business services. The company expects to earn income from interest paid on the credit instruments comprised in its investment portfolio, right? So they're issuing preference shares to get money to be able to invest in these sectors, to be able to, of course, earn income, and that income goes back to shareholders in terms of the dividends that they pay, right? Now, what it does not say here, and this is definitely one of the questions that we'll ask Jason Morris, co-founder for Sygnus Capital, when we speak to him in our interview, is maybe giving us a little bit more information. So for example, it shows the industries, right, which is helpful, but definitely would love to know, for example, do they have opportunities that are on the table? Is it that they're going to seek out these opportunities? How soon do they expect to be able to start using the proceeds? Like those are the kind of questions I would have by seeing this description here. Of course, if you understand the model of how Sygnus currently makes money, then you can have, I guess, a fair appreciation as to how they're likely to use the money. But then, of course, we always like to get as many specifics as possible to help us to kind of wrap our minds around how the funds will be used, what you can expect, what type of risk they may be, exposed to, etc. But then, of course, again, understanding the model of the company, this is definitely in line with what they currently do. So I wanted to include this slide as well so that you understand, preference shares a little bit better. So preference shareholders will have the following rights. So that's priority of payment to receive dividends over any other type of capital distribution. So that's over ordinary preference, ordinary shareholders, or it says here ordinary dividends or share buybacks to common equity holders, which means as a preference shareholder, you get your money first, right? So you get your dividends before any ordinary shareholders would get their dividends, or before they would seek to use funds to to direct towards a share buyback, right? Full voting rights on winding up, and then ranking in terms of priority to common equity in the event of a winding up. Again, that's the benefit of, well, it's kind of baked into the title, it's preference shares. So you get preference in terms of any eventualities for the company. So that's just something to bear in mind, right? And the preference share model is simple to understand. Essentially, when you invest in preference shares, you have a projected dividend. The company will say the frequency at which they're paying that dividend, and you can come to expect that money on whether that quarterly or biannual basis, and so on, right? All right, events photography. I see your question. I'm going to explain that a little bit later. All right, so we'll try to. Usually, when we see questions like that, we try to use the prospectus to answer it. So I want to go specifically to your question at that point. All right. So let's look at the company's performance by looking at their financials, and this is going to be a breakdown of like the last 5 years, right? So the company has been listed. That's SCI for over 5 years, and this is their performance since they would have been listed. So they listed in 2018, and so from 2019 until 2023, you see interest income has definitely gone up by 400%. So that's definitely good. They're growing their interest income, and of course, as the assets that they have grow and they're able to get interest through payments off those assets, and they're able to realize that income. All right, interest expense, of course, deducted, and then net interest income is up to 8.1 million from 3.1 million in 2019. Then they have the Puerto Rico credit investment income, then participation and commitment fees. Then that brings us to the total investment income. So essentially, you would consider this for a traditional company as their revenues, right? This is the money that they're earning, and as I said, that's up to, at this point, 8.8 million from 3.2 million in 2019. So that's good to see. Net investment income, that stands in 2023 at 5 million, and it would have been 5.2 last year. So let me see if we can attribute to what would have impacted that. Okay. Yeah, I read that wrong. So 5.26 last year, 5 million this year. Then let me see what else we want to highlight here. Let's look at now, well, profit attributable to shareholders, again, based on the business model, dividends. The company is structured to pay dividends. So you want to look, of course, that profit is growing. So in this case, profit as at 2023 is 5.1 million, and this is, of course, in USD, right? So this is not a GMD denomination in terms of these numbers. And then their earnings per share grew from 2019, which was at 59 cents, to 87 cents, right? So that's, of course, headed in the right direction in terms of growth. They were able to realize earnings per share of $1.11 in 2021. Currently, it stands at 87 cents. All right. So that would be essentially their P&L. This would be their balance sheet or statement of financial position. So cash and cash equivalents stand. So I'm only going to focus on 2023 because, of course, one of the things you want to look at for a company that is, for example, seeking to issue preference shares, you want to understand, of course, that they have the ability and capacity to repay and pay those dividends on time. So you want to look to the balance sheet and see how that is set up. All right, so cash and cash equivalents is 2.4 million. Of course, they're raising capital to be able to make investments. Of course, that capital would add to their cash until they're able to, of course, make the different investments. And then, of course, that adds to their income that would have looked at on the previous screen. All right. So dry powder as at 2023 is 4.4 million. And then we have, so I'm not going to get into the technicalities of the balance sheet and all of that stuff now in this setting, but we did a review of Sygnus actually on our channel, so you can check that out. I believe I might have gone a little bit more in depth as to their balance sheet and so on in that video. So if you want to go through that, you definitely can. But just going down further for the balance sheet, it has here investment in portfolio companies that stands at 126 million. And then of course, that total number is 155 million US. And then they have other assets. So based on the way that I would have you look at this, their assets are essentially going to be financial assets, right? So they make investments. Those investments can be in various the different instruments I would have mentioned when we were going through the company overview. So what you're looking at on the balance sheet are pretty much different classification of assets. And so of course, if you don't understand some of these terms, you can just let me know probably in the chat and I can try to explain further. But just understand that that's what we're going through now. So I'm kind of hearing in my head somebody who is a beginner saying, I don't understand what you're saying, Jermaine. So if that is you, just let me know and I'll try to break it down. But what we're going through, as I said, is their balance sheet to just know the state of the company as at right now, right? So their investment income receivable that we're looking at on the other assets stands at 5.1 million. So you hear the word receivable, that's something that would be owed to them. Other receivables, that's 907,000. Due from related parties, that's 1.8 million. So their total assets, right, as at 2023 is 163 million, right? Then their liabilities. So this now is what the company would owe. So they have notes payable, meaning it's something that they'll have to repay, loans and borrowings, preference shares that would have been issued previously, accounts payable, accrued liabilities and other liabilities. All of that totals 94 million. And then the rest is their share capital, equity, etc. right? So that's the state of their balance sheet currently. They would have just released their Q1 results. So I would typically encourage you to look at their most recent financials as well. But then, of course, again, just going back to why they're raising money is to make investments. Those investments generate income. Though that income, of course, ultimately leads to profitability that is returned to you in the form of dividends, right? So they have a breakdown MD&A for their financials as at June 30th. So we're actually going to read a little bit through that MD&A. So let me bring that up. Again, we're kind of going through this just for you to understand a little bit about the state of where the company is. You want to kind of understand them a little bit before you make an investment decision. So I'm just going to bring that up here. And then we're just going to read through a little bit of the MD&A, not all of it, but I like to go through, at the very least, understanding where the company is, how they have been growing, and what's the outlook, right? That's typically what I go to first. So let me just bring that up. Stop sharing for a second and share this instead. And let me know if you have any questions as I'm going through. It's not usual that we're doing a review and I have so little questions, so be sure to ask. In truth, preference shares are easy to understand. So for our regulars, you probably don't have a lot of questions where that is concerned. But if you're watching this and you're new, you definitely want to ask me any questions that you may have, so I can be sure to address them. Well, Aline, your question, their liabilities would increase drastically because of the preference share Well, so as you saw when I went through the balance sheet, preference share. Well, I mean, when a company raises capital through the preference share, yes, that would be a liability to them. It's money that you loan to them. They pay you dividends, and at the end of that term, you get back that capital, right? So that's how that would work. So in short, yes. And as I said, events photography. I wish I knew your name, by the way. So please tell me your name so I can use it. But if you purchase a 1,000 units, how do I work out the dividend at 10.5%? Okay, so I think I can answer that now while I'm bringing this up. So usually how it works, the only part that I need to confirm is whether or not the amount that they're quoted is taxable or not. But how it would work in a standard way, you have 1,000 units, you're gonna get 10.5% of the amount you have invested, right? And of course, when we get to the dividend yield, it'll speak to dividends being paid quarterly. So each quarter, you're gonna get 25% of that 10.5%. So let me actually work it out and tell you. 10.5% divided by 4, so 2.62% dividend is what you get each quarter, right? So let's say that 1,000 shares is $100, so that's $100,000, right? 1,000 units makes it $100,000 investment, and then you get 10.5% of that, which is essentially 10,500. Divide that by 4, which is 2,625, and that's what you're getting every quarter, right? On that 1,000 units, right? 2,625. As I was saying, though, the only thing that I need to confirm, Fabian, is whether or not the amount they're giving you is after tax or it's before tax. That's the only part that I need to just double check the prospectus for. But that's what you would get. All right. Yeah, that's the thing, Marlene. So as I said, I'll go through the prospectus because that's the only part that I would need to confirm. But typically they would state it there whether or not the dividends are after tax or pre-tax, right? So we should be able to confirm that. And yes, the dividend will be paid quarterly. We're gonna get to the dividend yield in a second, right? So we're gonna spend 5 minutes going through their MD&A for their year ended June 30th. Or I'm wondering if what I should do is go through their Q1 reports since they had their earnings call today. All right, give me 1 sec. I think that may be more practical for you. So let me go to their Q1 instead. All right. The only thing is, though, I must give you in terms of a disclaimer. I did not review the Q1 report before this video. So we'll be going through it together for the first time. All right, so this is their Q1 report. Let me share that. And as I said, I did the earnings call today. I was listening to it earlier. A lot of information there to help you understand the company. They do their earnings call quarterly. So very good information, helps you to understand where the company is headed, how they're constructed, etc. And so they have the link here to register for the earnings call in the report, which makes a lot of sense. You click on that, then you can participate in Teams, or you can simply watch it on YouTube. All right, so we're gonna go through the MD&A for their Q1 report since that's the most recent quarter, right? Aline, what do you mean? I read your statement wrong. I thought you were speaking about me here, but no. So I mean, there is a minimum that you can buy, which I believe is going to be. Let me check here. So I wouldn't make that comment, Aline. So the minimum is 500 units in increment of 100. So 500 by 100 is $50,000. So when you say it's not for the poor, Aline, I don't agree with that necessarily, because with $50,000 you can participate and you'd get the same 10.5% as somebody who has purchased 1 million shares, right? So the way to look at this offer is, and let me just go full screen for a sec. The way that I would look at this is, so you would look to preference share if you're looking for dividend income through investing, right? Of course, once the shares are listed, the price can vary depending on, you know, whether or not persons choose to sell their shares at a higher or lower price. That's not what I'm focusing on here. You are doing this as an alternative to having your money in the bank, right? If you put your money in the bank, you're getting 0% on it. If you have $50,000 and you buy these preference shares with it, you're getting 10.5% per year on that $50,000. Now, it doesn't feel like a lot of money in terms of you getting back $5,000, but it is 10% of whatever you have invested, right? So I wouldn't say that it's not poor. It's basically okay. So I read it that way, Orville, right? Okay, so let's go through the MD&A now, please. Let me do this quickly because we're trying to wrap up the review in an hour. So let's do that, right? So it says here that they would have reported record net interest income driven by record private credit portfolio for the 3 months ended September 30th. So their financial year ended in June. So September 30th is the end of their first quarter, but they had lower core revenues and lower net profits due primarily to volatile market conditions, which would have impacted the fair value of its investment in AFC, which is the company that we mentioned before. So they achieved a new milestone, AFC, in exceeding 100 million US in capital deployed since their majority acquisition in February 2022, right? So they've been able to accomplish that. Let me scroll down here. So it says, meanwhile, SCI is set to continue its growth path with the execution of several key initiatives on its regional private credit platform. So for the Jamaican market, they would have launched a preference share to raise 20 million and 800 million. That's what we're pretty much going through now. This new capital will target expansion and execution of its Jamaican origination pipeline. So this gives us some more context. Exceeding US 75 million in Puerto Rico. The group is seeking to sponsor the launch of a new multi-million investment vehicle targeting middle market firms, and is set to do similarly in the English-speaking Caribbean. Right, so they're giving you a little bit more insight as to their plans through this, and this is why you go through the documents. And it's saying, of course, they've been upgraded in terms of their credit ratings, or their credit ratings were reaffirmed rather at BBB minus and JMBBB plus, with a stable outlook on both the regional and the Jamaica national scale. So let me see what else we can get here, and this would be the results on the left rather. So you see, based on their Q1 this year versus Q1 last year, there's growth there. And what you're seeing on the rightmost column is what they did for the entire year. So they did 4 million in a quarter, and they did US 14 million for the entire FY 2023, right? So their profit for Q1 is 744,000, and their earnings per share for the quarter would be 13 cents as opposed to 28 cents, which it was last year, all right? So it's saying here their private credit portfolio and pipeline remains resilient and well positioned to navigate the high inflationary environment, something we're hearing every company say in terms of just the landscape. So you have to imagine that would have impact on this company as well. Saying its core revenues were lower by 27.5%, despite the record net interest income. And so that's what we have seen before. what I want to do is go through total operating expenses, efficiency. I want to actually go to, yeah. So I want to read from here now. So just again, this is information I think you may find valuable in terms of just understanding the company. So it says here during the quarter, an interim dividend of 1.6 million US was paid, or US 00272. And sometimes you have to look out for the companies that pay dividend in US, because the announcement may be made and you think it's Jamaican. But so just watch for that. So that was declared on September 15th and paid on October 13th. So that was a few months ago. They did a share buyback program, I believe, in June earlier this year, but they have not done any in Q1. So they're commenting on it here. So the group did not execute any purchases on that share buyback program during the quarter. The buyback program will last for a period of 3 years. Sorry. So from the launch during the fourth quarter of June 2023, and will be for amount of up to US 9 million, right? So they're pretty much going to be buying back shares throughout a period of 3 years as they see fit, right? So usually when companies are doing share buybacks, they try to look for an ideal price. When they see the price that they're looking for, then they buy shares in that way. All right. I want to see if there's an outlook. This would be portfolio company allocation by industry. So you'd have remember the industries that were mentioned in terms of how they're planning to invest. They would be consistent with how they currently invest. So as I said, if you're familiar with the company, then you'll understand why they might have listed it in that way. And then you have portfolio company allocation by region, and then they have them listed there. So we can learn a little bit more, I guess, about the types of companies in the industries that they're invested in. Hopefully we can get that context from Jason. And I'm interested in, okay, this part here. So it says dry powder on their balance sheet was 2.5 million US, comprising of short-term instruments and cash. The group also had an undrawn revolving credit line of approximately 2.7 million. So they continue its discussion with international financing partners to secure credit facilities, which will aim to propel the scaling of its business segments and the expansion of new revenue streams. So the company has its sights set on acquiring 100 million US in international credit facilities. So the company, of course, needs capital to continue to make its investments. So that is what they're seeking to do there, and they're seeking to do that on an international level, right? Okay, so okay, I'm just looking to see if there are any questions. Well, let me go back to the rest of the slides, and then we can talk about some of the other stuff that I'm seeing in the chat now, right? So again, dividend policy now is going to be extremely important for anybody seeking to understand this offer. So each class of the preference share will be paid dividends at the respective dividend rates. So remember we mentioned three tranches, 2 USD, 1 JMD, so 8.5% and 8% on the USD and 10.5% on the JMD. And what I said I was going to mention before is usually for the USD, the interest rates, of course, are usually a little lower. Some persons may say, why would it be lower? Think about a USD as the USD option as the opportunity to be able to benefit from the increased valuation of the USD while you're holding that preference share in the USD. So it's normal to see the rate slightly lower for USD, but I wouldn't look at it as necessarily a bad thing, because I see where companies will typically factor in the fact that the USD might, appreciate in itself while you're holding for that dividend, right? So it says dividend will be paid quarterly on the final business day of the financial quarter and commencing the first quarter after the issue date, right? So I believe that would be starting next year. They would pay dividends. So let's say assume they close December 6th as planned. They will start paying dividends on a quarterly basis on the final business day in the financial quarter and commencing the first quarter after the issue date, right? In the event that the dividend payment date is not a business day, the payment shall be made on the previous business day. So if it ends on, let's say, a Saturday, they'll pay it on the Friday, and dividend shall be paid from the distributable profits of the company. That is standard. You can't pay from money that you don't have. So the company has to make a profit to be able to pay those dividends. And of course, based on the rights of preference shareholders, you get your dividends first before ordinary shareholders, and the company has a track record of paying consistent dividends. So as preference shareholders, you would get your dividends first. All right, so this would be dividends paid over the last few years, so as far back as 2018, and you're seeing the total amount in terms of US dollar paid in the right, well, the second to most right column. So this would be for their ordinary shareholders in terms of paying twice per year for the last 4 to 5 years. So again, that is expected to, of course, continue. And then this would be their JMD preference shares and their USD index preference share dividends, right? So again, you're seeing where they're paying dividends consistently. So they're pretty much usually sharing this to know that there's a track record of paying dividends, and it's something that they've been able to manage consistently well. Let's talk about how to apply, and then we'll talk about some of the other things that I'd be looking at in terms of this offer, answering any questions you may have and all of that, right? So the lead broker here is JMB. So they have a recently launched Moneyline IPO platform. So if you go to that platform, you will see the screenshot IPO because we don't have a preference share category. So it is not to be considered an IPO, but I guess for simplicity, they have done that. So you'll see the details. So going back to what Fabian was asking, you can pretty much, you can choose the tranche that you want to buy from, pay that amount of. So for example, if you're applying for USD, it has to be a USD brokerage account. So this one that you're seeing on the screen is showing the JMD amount. Then of course you can apply through there. Usually, in the days following the prospectus coming out, they'll talk about any other brokers that you may be able to purchase through. But if you go to that website, you'll be able to sign up. And it's also showing here down the bottom right that JMB clients, if you have Moneyline, then you can apply through Moneyline. For non-JMB clients, you can apply through Moneyline IPO. And I confirmed with JMB today that if you have another brokerage account, you can go ahead and use the Moneyline IPO platform, and you should be able to apply, no problem. All right, so that would be it in terms of the prospectus review. So let me see if there are any questions. Again, this is a simple offer to understand, really. You want to think about for a preference share, the company's track record. So, as I said, there would have been a company that's been in the market 5 years. So it's not like it's a brand new company. You have the ability to go through their history, see how they've been performing. They're using the capital in this case to be able to grow their business, to gain more interest income. That income then now goes down to their shareholders in the form of dividends. And that's a business model of the company, right? So what I would definitely love to understand, and as I said, this is one of the questions that I would ask is, based on the industries that have been stated, just to kind of understand a little bit maybe about the investment strategy. But in terms of understanding the offer, very easy to understand. And if you remember, we did the PBS preference share offer, that prospectus review on our platform last year. So if you watch that video as well, you'll see it's a similar kind of format, simple and easy to understand, right? All right, so let me go through some of these questions. We still have time, so I can go through pretty much all of them that I see. All right, so Orville is saying I don't have enough coins to offload on these type of instruments. So Orville, in your case, I know you well, right? So you are somebody who invests in equities. I think for this type of opportunity, again, I'm not a licensed financial advisor, but this would be ideal for somebody who's seeking to get income from dividends, right? You're not looking for cap gains, you're looking for income, right? So so there are a lot. I think there was something that was released that there are, how many billions in funds in savings accounts in Jamaica. Those are the type of persons with money in savings accounts that could benefit from this, because they're getting 10.5% on their JMD each year, right? You're not going to get that from the savings account. Elaine, when you ask how the preference share market is looking, what are you asking, right? Because as I said, once the shares are listed, you as a shareholder can buy or sell those shares at whatever price you want. That doesn't change the dividend that is paid. So for example, let's say you buy those shares at $100 JMD and you choose to sell those shares for $90. You can if you want to. But that person that purchased the shares at $90, they're going to get the same 10.5% on the number of shares that they own each year, right? So it's, when you say how the preference share market is looking, I'm not sure what you're really asking there. So I'm really saying I have no idea. I've never been interested. Yeah, I mean it's Orville, I don't take it to be a dividend investor like myself. So I look for, I've always been a fan of double-digit dividend yields. So Marlene, when you say more risk, how are you looking at the risk? In this case, can you explain further? In case yes, it would be on JMMB Moneyline already. What do I think about the risk involved? So the way that I think about it, and I hope I'm framing this the right way. So when you look at a company doing a preference share, again, because this company has a history, if you have confidence in the company, what you're saying is that you trust that they're going to deploy the funds wisely. Those investments will give them the income that they're looking for, and that income is coming back to you, right? So the benefit of being a preference shareholder is that if you look at, so let's say the company's operation remain exactly as it is. The company has been able to pay dividends consistently from their core business outside of the funds that they would be getting from this preference share. What they're saying is, for the preference shareholders, they have a higher right to dividends being paid, right? So the preference shareholders will get their dividends first, as opposed to ordinary shareholders. So the risk that I see there is just a general risk that would apply to the company in terms of things like, I guess, let's say they invest in industries, and maybe those industries don't perform as they expected. That may impact the amount of interest income. But then you still look at it to say, well, the investment themselves, the underlying asset should still be there. So it may just be a matter of the period for which they're not getting the type of returns they're looking for. And then that's something that you expect to improve on over time. But then, of course, that's why you look at the company's balance sheet and their track record, and you kind of have the assumption that, they're able to honor the commitment of paying the preference share based on how much they're seeking to raise, what they have in the pipeline, and the state of their business as it is right now. So how does it match up to the last preference share offer? Elaine is asking, when you say how does it match up, I think the amount for the PBS preference share, let me see if I can find that one. I don't necessarily want to bring that up since we're talking about Sygnus on this one, but I believe the PBS preference share was actually priced higher. It was the same 10.5%, but it was priced higher. I think it was like maybe $1,000 per share or something like that. That's what I remember. So if you check the PBS preference share price, I believe the last time I saw it was like maybe $1,100 or something like that. Orville is saying, I know the stance you take. Likewise, I know. Come on, man. So Elaine is asking, have we seen declines in the share price of the preference share on the market? Okay. So I get what you're asking. So Elaine, look at it this way. With a preference share, regardless of the price, you are going to get your dividends the same way, right? So what you need to be concerned with is more of the price that you purchase. And what I mean by that is if the shares are listed, then you purchase, you certainly don't want to be somebody who overpays for the shares. And what I mean by overpays is that, let's say that the shares are listed at $100 and you purchase it at $120. When it gets to the point where it gets to maturity and those funds are being returned to you, you're going to get back less than what you would have paid for the shares, right? So that's the part that I would think about. Now, usually you consider the tenure. And what I mean by that is, let's say that at the start, there's high demand for the shares. The share price can actually go up for the preference shares on the market. But that's a game that I don't typically like to get involved in because you're taking a greater risk there. Now, if the share price is lower than what it would have listed for, meaning let's say it's $90, $80, etc., then you have a great opportunity to purchase and realize a higher yield on that dividend because you're purchasing at a lower price. But again, I don't necessarily want to complicate it for those who are beginners. But yeah, that's how I would look at it. So Kish is saying you get paid first. Yes, that's correct. So Orville, there's a JMD side, there's a USD side, right? So the minimum from the USD side, let me tell you, so it's 50 minimum times 10 US dollars, so is 500 US, Orville. So the minimum you're finding is 500 US, is not 10,000 US dollars. The minimum is 50 units for the USD, and it's $10 US per share. So that's 500 USD. All right. Let me see. So the goal for me is interest rate. I keep until much. So if that's it for you, Marlene, then it's a simple decision. You're just looking at the dividend yield. Yes, I think the PBS preference share was 9.25 and 10.5. I'm trying to remember. The PBS one was perpetual, but SCI is 2 years. Let me share that. So it says here 2 years for the USD and 3 years for the JMD, right? Okay, so in terms of how easy it is to sell, okay, I get that perspective, but there's no way to know how it will trade once it lists, honestly. But you wouldn't necessarily be purchasing preference shares with the intent to sell them, right? That's not kind of the thing that I would recommend there. Snow Angel is asking, we can go back and purchase more preference shares. So after they've listed, yes, right? So you can, and that's a benefit of it being listed. You can purchase more shares, more and more, as you just have to. So for the purpose of the offer, there's a minimum amount, but once it's listed on the market, you can purchase whatever is available to purchase on the market. All right, Orville, no problem. All right, so I want to just clarify, it's 500 US minimum for the 500 US minimum for the class D and E, and 50,000 minimum for the JMD, right? So it's, again, it's a preference share offer. There's typically somewhere between like 50,000 and 100,000 to start, but it's not the same as an IPO that would be going for like $1 per share and then your minimum like 10,000 units. No, but again, this would be targeting persons who would have savings or looking for dividend income, which for me, as I said, in this investment climate, I'm looking for dividends because cap gains aren't guaranteed, right? Last question, if you buy at a lower price, $80 after listing, then hold for maturity, what price will you get for your shares? $100? Yes. Yes, Aline, that's my understanding, which is why on the opposite of it, as I said, you want to be sure that you're not purchasing it at like 120, 130, etc., because that means you're essentially going to make a loss, right? So you want to just be mindful of the price you're purchasing after listing, just in case. And of course, you can understand why it may be available for $80, because persons may want some liquidity, so they're just putting it at a price that they think it will sell for. I don't typically recommend that. Again, you don't treat a preference share as a regular stock. Treat it as a replacement to savings. Let me check that question, Kish. Because I did say that I would check about the interest rate as well. Whether or not the yield is after or before tax. So Aline, yes. So David in our group would mention these opportunities all the time. So we can talk with David in the group about it. But yes, that's how the preference shares work. All right. So I'm just looking to answer Kish's question and the question that we had about the tax earlier. And then we can see. I think those are the two questions that we have, and then we can close out this review. As I said, we have an interview with Jason Morris from Sygnus on Monday, so you want to check that out. I'm definitely going to be asking Jason about their investment strategy, try to understand the company, how they're going to be deploying the funds, what the pipeline looks like. Do they just kind of understand the business, the company a little bit more. It's not a complex business to understand, but at the same time, you want to, of course, get as much information as you can before you make an investment decision. That's why we do this content here for you. So, but as I said, you want to not treat a preference share like a stock. And so you want to understand the clear benefits and, operate from there. All right, so let me look for that. So I apologize in advance, you just watching me scroll, but I'm trying to find it. And all right, one sec, guys. Let me just share my screen so that somebody doesn't join and think I'm not doing anything, like you're just watching me scroll. So usually they have the terms listed somewhere. Let me check the page of contents first. So I can do a more targeted search. Information, capital structure, documents, exposure, invitation. I feel like it could be in the invitation sections at 17. All right. All right, one sec. They're using parts. So Kish, they're essentially what they're saying the use of proceeds is they're taking in that money to be able to expand in terms of their investments for their credit portfolio. So Snow Angel, I'm referring to our Telegram group. That's where we talk about investments on a daily basis. I can share that link with you now. That you can join, and anyone is welcome to join as well. Yeah, so I'm just going to do, I feel like if I can't find it in another minute, I'll probably just post it in the comments under the video, but I like to see it exactly in the prospectus and not make any assumption. But of course we can always ask the team that question. I feel like saying if there's anyone from either JMMB or Sygnus who is here who knows the answer to the question, feel free to answer. Just want to see if it's in the prospectus listed so we know. Class, dividend yield. Pay, submission. All right, so that's, I'd say, guys, if you allow me to just probably ask the team, I feel like if I ask the team, I get the answer a lot quicker. So let me see if it's in the summary that I have. And then this is the kind of question that we could probably answer because I feel kind of foolish scrolling for the last couple of minutes and not seeing anything. So Kish, I'll find that out for you. And then I will also find out, Marlene was asking, I think, about the tax, whether or not it's tax comes out of that 10.5. I think so. But as I said, I just like to check the prospectus for this kind of thing because sometimes a company may make allowances for that. So I like to use that as a reference, right? Okay, Kish, can you tell me where you found it so I can bring it up on the screen? So Kish is saying that no tax. Okay, can you tell me where you found it, please, so I can share it on the screen here? Tell me which page, and so I can bring it up. So Marlene is asking Kish if it's no tax to the government, section 8. All right. Hold on, section 8, the invitation. That's where I said I was gonna go. Which section under 8? That's where I said I was gonna go, and I was like, it's likely to be under the invitation. And I did not do what I had in mind to do. All right, so let's start from the top of section 8. So this is all the details about the offer. So all of this we went through already. So this is showing the rating of the company, which we spoke about. These are the different, the share price for each and the different classes of shares, the term. So went through all of that already. Page 16. Can you tell me the section on the 8, like 8.1, 8.2? Just in case I don't miss it. Share shall pay. Subject to applicable laws, including withholding taxes, investors will be responsible for filing their own taxes. Is that what you saw, Kish? I don't know if I should interpret this to mean that subject to the applicable laws, including withholding taxes, investors will be responsible for filing their own taxes. That last line makes me feel as if they're not going to take it out and you have to do your personal filing. That's how I'm interpreting this. Don't believe the government will let this go untaxed. I mean, it depends, you know. Depends. So that's one thing that we see about tax. All of these other information is about the offer itself, which would have gone through already. Listing and opening information, provisions of the prospectus, how to apply, we went through that already. Invitation closing, how the company intends to use the money, would have gone through that as well. So, okay, so Kish, the section that we read, that was what you saw as well? This section on taxation, that was what you saw, Kish? All right, let me search. For the other question. All right, 1 second, just doing another search. All right, so I think this is a part that answers the other question that we had. Let me find out this section here. Okay, so again, this is the type of question that we can probably clear up no problem in the interview. So this is, let me tell you the section that I'm on. This is page 60. So this is what I found. Let me share my screen. Yeah, that is what I understood as well. But as I said, these are the kind of things I like to ask explicitly, because sometimes how things are worded, I might interpret it incorrectly. So this is the, I'm going to use the JMD as the example. So this is the terms of issue that I'm reading through. So the agreed rate, so 10.5% as we discussed on a 360-day basis. Went through the business days and that stuff already. Maturity we know is 24 months or 2 years. So redemption payments shall bear the meaning ascribed to the expression in paragraph B of this terms of issue. So we'll get there. Settlement date shall be the date coinciding with the close of offer relating to the preference share. All right, so we'll understand that already. So dividend commencing March 30th, 2024, last business day of the quarter that they would have mentioned. In terms of when you'll start getting your payments. We spoke about this earlier in terms of the rights of preference shareholders. So that's what this is explaining here. So notwithstanding any provision to the contrary herein, accrued and unpaid dividends will accumulate, and the same to be paid the next succeeding quarterly payment date. So if for some reason they don't make a dividend payment one quarter, you get the accumulated amount of dividends you would have had to get on the next payment. That's what they're saying here. And that's what the cumulative part of the whole name of the offer comes from. So cumulative redeemable preference share. That's what the cumulative would have been for. So it says a preference share shall not carry in the right to vote at any meeting except in circumstances where, and that's what they're explaining there. At the time and place fixed for redemption, the registered holder, if such holder is the holder of the preference share by virtue of an allotment by the company, or transferee shall be bound to deliver up to the company. That's not what we're looking for. Share redeemer shall be. All right, so looking for specifically, I think this is Marlene's question. Yeah, so I'm gonna probably read through this, and as I said, I'm very certain we can clarify that part, but part about the tax, we read that one. I think we probably have the same understanding of that. But again, that's a simple question to ask, and I'll probably just post it under the video and in the group. 9.9. Thank you, sir. Like, hold on. 9.9, section 9.9. Would also help if you told me the page as well, but I think, wait, where's 9.9? I thought you were referring me to a section, Kish. I don't see a 9.9. Section 9 goes up to 9.3. Okay. All right, so I think we're gonna end it there, guys. Are there any other questions that you have? So we're likely going to just get those two questions answered just to confirm, because as I said, if it's not explicitly clear, we'll just ask those kind of questions to ensure that we're communicating the right thing, and of course that there are no misunderstandings. But you certainly want to check out the interview that we have Monday with Jason Morris from Sygnus. Ask any questions that you have. You can actually start to submit them in advance. All the information that you'd need to know in terms of the prospectus, take your time, read it through. We focus on the sections that we think are relevant to understand at a high level what the offer is. So for those who just joined us, a preference share is pretty straightforward to understand. There's a minimum amount that you have to purchase. For the JMD, that's $50,000 or 500 units at $100 each. And on the US side is 50 units, $10 each. So that's 500 US or about $78,000. And then your dividends are paid quarterly, right? Very easy to understand. And then on the application side, you can apply through JMB's Moneyline platform if you're a JMB customer. If you're not a JMB customer, you can use Moneyline IPO. There are likely to be other agents in terms of brokers soon, but we usually wait for that announcement. And yeah, that's it. Okay. All right. So thank you, Kish, for that. So Kish has found what we're looking for to answer our question. So it says no withholding tax would apply in St. Lucia on payments of income that are exempt under the Income Tax Act of St. Lucia, such as dividends or on payments made towards expenses incurred to generate income from a source outside St. Lucia. Otherwise, withholding tax may apply, right? So I think that addresses the question about taxes. Yeah. All right. So I'm hoping that this was clear for everyone. So guys, let me know in the chat, is this an offer that you're interested in? Did this review make sense for you? Or do you have any other questions? Just let me know either in the chat or under the comments below. We do have that interview on Monday, as I said, with Jason. So you really want to check that out and get your questions answered. I will take it from there. All right. So I'm going to close out the review now. And I hope to see you all on Monday. Please share the video with persons who may be interested in this offer. If you've always wanted to get somebody started in terms of investing, I think actually offers like preference shares are actually a very simple thing to kind of introduce them to, because otherwise when you try to explain stocks to a beginner, it may get a little complicated. A preference share is a little bit more straightforward. So this may be an opportunity, you never know. So just share this video with your friends, with your family, with your co-workers, anyone who you think may be interested. And then of course, we hope to see you in the very next video. And yep.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.